On to Daily Mortgage Rates Live with the Mortgage Calculator. We'll wait just a couple minutes here to get started. Let us go live on all the different platforms. In the meantime, we put the chat up. Go ahead and drop a comment in the chat, and we will get started here shortly. Hope everybody had a great holiday weekend. And we are back at it to check out the rates for today. Thank you, everyone, for tuning in nice and early. People already commenting there. Jason, Mark. We'll get started here in just a moment. Everybody just tuning in. We're just waiting a couple minutes here to get started. Let us go live on all the different platforms. Feel free to drop a comment there in the chat as we get started. We put the chat up on the screen. All right, it looks like we are good to go, so we can go ahead and get it started. Give us just a second. We'll take the chat off the screen here, and then we will get into it. So welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non QM loans. And what we do on this show every morning is pull up the actual live interest rates for conventional programs as well as some other programs. And then we do a deep dive into a different topic every day. Today's deep dive is going to be something we're very familiar with here at the Mortgage Calculator because we specialize in non QM loans, which is interest only DSCR loans. So our favorite loan here at the Mortgage Calculator is our DSCR loan, debt service coverage ratio, which is a loan for an investment property that requires no income verification from the borrower, no employment verification from the borrower. We simply go based on the debt service coverage ratio of the property. Now, today we're going to be talking about a subset of that type of loan, which is a interest-only DSCR loan, which gives us a lot of freedom and maneuverability, I guess you could say, when doing these loans. And so our sales manager, Jose Gonzalez, with 27 years of experience, is going to do a deep dive into that topic here shortly. But before we get into that, we'll go ahead and do what we do every morning, which is pull up our pricing tool and go through the live mortgage rates for today. So, Nick, if you're ready, let's go ahead and pull up the pricing tool and see what the market is looking like this morning.
All right, let me switch my screen. Get started. All right, as Kyle mentioned, this is our pricing tool for our mortgage professionals. This will show us the general rates and the APR, including all the fees. For today, it is July 5th, just after 11 a.m. Eastern. So most of our programs have live rates now after the holiday yesterday. So this will show us the general APR. If you'd like a full breakdown of all the fees that go in there and a full loan estimate with the itemized fees, please get with one of our loan officers. We have over 300 licensed loan officers in 24 states for primary and second homes, and we can do the DSCR loan, which is a topic for today, in 44 states. So for all our demos today, though, we'll set up a simple scenario, 400,000 loan amount, 80% loan to value, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. And we will compare our loan programs. We'll start with conforming conventional loans. Then we'll check out our FHA rates this morning. And then we'll go into expanded guidelines, also known as non QM, where we have over 5,000 additional loan programs using alternative income for primary homes. And then we'll check out the DSCR options as well later. We also have VA and USDA. We don't do those live. VA is only for eligible veterans and active service members. So if you are eligible, let us know. We can quote it very quickly. And same with USDA. Those are only for properties that are eligible. If you do happen to be shopping in a USDA rural area, please let us know and we'd be happy to quote that. So we'll start today with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade, and an estimated FICO of 760, and an estimated debt-to-income ratio of 40. So with all these basic settings, we will compare across the programs. That way we can compare APR and look at them apples to apples. So let's see the conventional rates this morning. About the same as it's been. So hopefully we see some action this week after the news. We have a 7% rate for 0.875 discount points and costs, and a final APR of 7.163. So remember, we're going to use the APR to compare across the programs. So this is a great option for conventional. And if a customer doesn't qualify for conventional, usually the first option, the next option we'll compare is FHA. So we'll compare the APR from conventional here. And now we will check out our FHA with the same exact settings. So FHA does allow us a little more leniency on credit events, as well as a higher debt to income ratio we can go to. But for this demo, we're going to keep everything exactly the same so we can compare APR directly across the programs. So let's check out the FHA options this morning. So yeah, FHA did go up a little bit as well. So 6.375 rate for 1 discount point and cost, and a final APR of 6.967. So the FHA just a touch below 7, and the conventional just a touch above 7 here this morning. So in this case, though, if our customer qualifies for both options, FHA is actually a touch cheaper. So definitely recommend our customers that usually don't look at FHA, still check it out. There has been some updates there because the APR includes the mortgage insurance, both upfront and yearly. So definitely to consider, since it actually might be a touch cheaper, especially today for this exact scenario. Now, where we love to specialize at the Mortgage Calculator is if our customer doesn't qualify for either program of the standard FHA or conventional. Many other banks or lenders don't have other options, but that's where we specialize here with our expanded guidelines, also known as Non QM. So if we keep everything else exactly the same, we have a new amazing option that pops up where we can choose our income on our Non QM programs. So full docs, what we use for conventional and FHA, that would be 2 years of tax returns. So we would typically choose one of these options to not select that. So we would usually choose another option like asset related, business bank statements, our DSCR options we'll talk about in a minute. Personal bank statement, 12-month, our most popular program by far. So we will check that out here on the demo. We also have RSUs, stated income, VOE, 1099, P&L, and no income at all, bunch of different options. Most common is the 12-month bank statement option for our self-employed borrowers. Many times our self-employed borrowers have various write-offs and have difficulties qualifying for the income they want with their tax returns. So in this case, instead of tax returns, we're simply going to use their last 12 months of bank statements to determine a debt to income ratio of 40% in this example, using just their cash in their bank statements. So most self-employed borrowers qualify for double, triple the income using this method, and therefore can qualify where they wouldn't qualify before, or qualify for more income and get that home they really want. So these are amazing options. The rates are a touch higher because they're alternative programs, but they solve these problems for our borrowers that need that extra help. So let's check out the Non QM options this morning. Great option at the top here, 7.375 rate, just a touch higher than conventional there. 0.875 discount points there, great deal, and a final APR of 7.437. So for just a touch higher than conventional, we can use alternative income documents. And if we scroll down here, these Non QM programs at a little bit higher rates may allow things like credit events, like foreclosures and bankruptcies, and other things that would put us out of the qualification for these standard programs. So definitely recommend anybody with a little bit of need for some extra help, let us know. One of these programs will typically solve your problem here. Now, before we give it over to Jose for the detailed examples for DSCR, we always want to check out the live rates for investment properties as well. So for our last 2 demos, we will change it to investment property. So we love to work with investors, whether you're a first-time investor or a seasoned investor, we have some great options. So we'll set up the scenario exactly the same, 80% loan to value, 20% down payment, and we'll simply compare our 2 options here, conforming conventional for investment properties and our Non QM options. Remember the government options, FHA, VA, USDA, those are not eligible for investment. So we'll start with conforming conventional. Everything will stay the same as all our other demos. All we've done here is change the occupancy. So let's see what the conventional programs add today for an investment property. So this one's obviously not an option. This is a non QM option, so looks a little funky. But this top option is the best real conventional option, 7.375 rate, great rate, but high discount points here. The conventional programs have added loan level price adjustments for investment properties, so very hard to get a 1 discount point option. So here we have 4 discount points for a final APR of 7.642. So a great option for our customers that qualify for conventional, but most investors ask for an option with actually 1 discount point, and that's where we want to bring up our alternative options here. This 4 discount points is quite expensive at $16,000. Most investors would rather deploy that money elsewhere and don't mind going a little bit higher in rate. So that's where the conventional programs have limitations right now, and that's where we love to present our non-QM options. So we'll set up the scenario the same one more time, and we will set expanded guidelines, aka non-QM, for our investment property. And now we have a couple new options to set. So first off, our income verification. As Kyle mentioned before we started in our topic for today, our most popular option for an investment property is going to be our DSCR option, also known as debt service coverage ratio. And what that does is just allows us to use the estimated rental income from the property, no actual employment or personal income needed from the investor. We just make sure the estimated rental income from the property covers the PITIA or the mortgage expenses of the property, aka the property cash flows on a monthly basis. So if the property cash flows, aka makes more in estimated rent per month than the mortgage payments, that's a DSCR ratio of 1.00 or higher. And we even have options for ratios that are under 1.00, aka the property does not cash flow on a monthly basis. So a ton of different options here for DSCR. Usually I put this blank, but we have to type a value in now to make some results happen. So I'm going to put in 1.5, nice high value. That way all the options pop up. And we do need to put a prepayment penalty in here as well. That is standard for investment properties under non-QM. So we always choose 3 years for the demo. That's the most common. There are options for no prepayment that will cost a little bit more, but not all loan programs allow it. And same with 5 years, that will cost less, save us a little bit of money if a customer wants to hold the property, but not all programs allow it. So we'll always choose 3 years for the most common option so we can see all the different scenarios. So now let's check out the DSCR options today. So some great options here at 8.0 rate, a little bit higher rate, but now we've solved the discount points, 0.975 discount points. Our investors happy as long as the property cash flows, and a final APR of 8.066. So remember, conventional was just over 7.6. Now we're just a little bit higher than conventional, but using a DSCR program, no income, no employment needed, none of that. So tons of different options here as well. For our DSCR options, for different ratios, different prepayment penalties, different credit events they allow. These programs may allow things like bankruptcies and foreclosures as well at a little bit higher rates, as well as allowing short-term rental income. There are also a bunch of different flavors of DSCR. That's why we love this program. It is so flexible. And Jose is going to show us one version of that. This is the more standard version, but now we'll get to check out a detailed option. So let me switch my screen real quick. And we'll introduce our deep dive topic for today. So we just checked out the DSCR rates for the standard 30-year fixed, which is a standard loan. That way it's apples to apples across the programs. But we have some crazy options we can do with DSCR. We went over the other day the 40-year options. Now we're going to talk about the interest-only options. So a bunch of cool features we can add once we get into the non-QM world. And it allows us to be flexible and allows us to solve problems. That's why we love these programs. So I'll go ahead and let Jose introduce the examples we have for today, and then we'll check out his live rates.
Good morning, everybody. Thank you for joining us. Daily Rates Live with the Mortgage Calculator. Yes, today we're expanding on our DSCR options by showing you interest only options, which will allow us to further fine tune the debt service coverage ratio to make sure that we get in above our objective, whether it's 1.0, which is the most common, or whether it's 1.25 or 1.5 if you're trying to get slightly better rates. With the higher DSCR, there are improved loan level price adjustments. So keep in mind, many times this interest only feature will make it happen for you. You can go with either a 30-year amortization or a 40-year amortization on your interest only option if you want to really max out the benefit. So our first example here is at an 85% LTV, and let me increase the size here a little bit. So we're 15% down payment, interest only, 30-year amortization. So for a one, and this is for a 1 unit property, 2 to 4 unit property does max out on this product at a 75%. So uh, here we're looking at 11.625 is your lowest cost option, and you can buy it down all the way to 9.875. Again, this is 15% down, interest only purchase. So now we go to our more common 80% loan to value or 20% down. And this is again for a 30-year amortization on the interest only. You do see very good rates here, 8.875. Our lowest cost option has a lender credit of $600, and you can buy it down all the way to 7.625. And again, this is interest only with a 30-year amortization for a 1 unit. However, now if you're really tweaking it, we can go with the interest only option with the 40-year amortization. Now, there is going to be a little bit of an adjustment, loan level price adjustment here, as you can see, when you go to the 40-year from the 30 years. So, again, on this option here, 7.625 was our lowest rate option with the 30-year, but when we go to the 40-year, it does climb a little bit to 8.125. So obviously, you have to really weigh out the benefit and make sure that at the higher rate, you're still reaching your objective when you're going to the 40-year. If you were at the 7.625, maybe not, but if you're somewhere here in the middle range, then you will definitely get the benefit here of going 40-year for our 1 unit. So now we go 2 to 4 units, 20% down, and it is the same price. So there is no loan level price adjustment when we are searching for the 20% down DSCR when we are doing the 40-year and the interest only. So this should really you'll have to remember this, because a lot of times we assume that there's going to be a pricing difference from a 2 to 4 unit and a 1 unit, as that's how it is in the conventional loans. But in the DSCR world, no difference, no discrimination there. We love those 2 to 4 units properties, great cash flow. So again, you see 9.499 lowest cost option, and you can buy it down to 8.125. So now we get a little bit more interesting here. We have our 0.75 to 0.99 DSCR interest only purchase for a 2 to 4 unit. And this is a minimum 25% down payment. Notice we even have 40-year amortization there. So This is amazing. Also, if you have those short-term rental properties that you can't get those short-term rental comps, borrower definitely knows he's going to hit a home run with the property. They definitely want it. This is the best way to make it happen there. 10.375 is the lowest cost option, but you can buy it all the way down to 8.375 for a property that's not even cash flowing 1.0. So this is pretty amazing. Again, when you're looking at 0.75 to 0.99 DSCR, interest only, purchase 2 to 4 unit, 40-year amortization. That's a mouthful. So now we have even a little bit more of a mind blower. Our less than 0.75 DSCR, interest only, 2 to 4 unit, 25% down with a 40-year amortization. Yes, you heard me correct. This is our less than 0.75 DSCR option. And look at those rates. This is at a 75% LTV. Just wanted you all to note 75% LTV, not 70% on our less than 0.75. So it looks like this program got a little bit of an increase in LTV, as it was previously a 70% LTV max option. Now it's 75. And you even have a little bit of a lender credit at 9.75. And you can buy it down all the way to 7.99 with a 40-year amortization with interest only on a purchase, which is amazing. And then last but not least, our interest only option on that same product, less than 0.75, is still 75%. So keep that in mind. We have a less than 0.75 DSCR, interest only 40-year amortization option, 75% LTV, with the lowest rate option, 10.375. And you can buy it down all the way to 8.375 for this awesome cash out option on our DSCR interest only. So many ways to make it happen with the DSCR loans: 40-year, 30-year, interest only, less than 0.75, 0.75 to 0.99, over 1.0, over 1.25, and over 1.5.
Getting tricky. I like
Yes,
it.
sir.
All right, I don't see any questions. I'm sure everybody has some, but just set up some quotes, guys, on our team. Experiment with those buttons there, and you'll see what Jose is looking at. You can always add that feature to any program, basically, and typically it'll help you qualify. It costs a little bit, but as you saw there, a great thing we can add. So I guess you can go ahead and wrap it up, Kyle, if we don't have any specific questions. But please experiment, guys. It's definitely a cool feature.
Yeah, absolutely. Okay, so remember, we do this show at 11 a.m. Eastern every single weekday, where we go through the live pricing and then we do a deep dive into a different topic. Got some great topics here for the rest of the week as well. So make sure to tune in. We appreciate everybody tuning in today. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone take care.
Thanks, everybody.
Have a great